Good day, guys. I hope everyone is doing well. So today we'll be focusing on fair value gaps, the types of fair value gaps, and what you expect when price gets into a fair value gap. So let's just get started with it. A fair value gap, okay. A fair value gap is a three-candle pattern where the first candle high or low doesn't overlap with the third candle high or low. So it's a three-candle pattern, right? So we have the first candle, the second candle, and the third candle. Whereby the low of that candle, that means the wick of this first candle, the low of it doesn't overlap with the low of this. Okay, so doesn't overlap in this sense. Um, sorry, it doesn't overlap in this sense, right? See, when they overlap like this, and these two overlap, it's not a fair value gap, right? So there should be a gap between the two, and that's what creates the fair value gap. So the first candle's low and then the third candle's high do not overlap. So when they do not overlap, they create a gap, and that gap is what we call the fair value gap. So a fair value gap is a three-candle pattern where the first candle is low or the high. So this is a bearish fair value gap. That means you do not expect the low to overlap with the third candle's high. And when they do not overlap, you have a gap in between them. And that gap is what we call a fair value gap. So we'll talk about the types of fair value gaps. So one, we have the bearish fair value gap, okay, the SIBI. And then the SIBI means the sell side imbalance and then buy side inefficiency. So sell side imbalance, so a fair value gap is an imbalance between price, right? So there's been an imbalance in price whereby we expect price to come back to that imbalance to do what? Balance it. So a bearish fair value gap is called a SIBI, meaning a sell side imbalance and a buy side inefficiency, or put it simple, bearish fair value gap. And we have a bullish fair value gap. So a bullish fair value gap is also called the buy side imbalance, sell side inefficiency. Okay, a bullish fair value gap, CB, BC, sorry, buy side imbalance, sell side imbalance, inefficiency. So the first candle, right? The first candle high in a bullish fair value gap does not overlap with the third candle's low. Okay, and when they do not overlap in the second candle, there's a gap, and that gap is what we call a bullish fair value gap. So this is just a simple video, very understandable for you to understand fair value gaps. Okay. So what we expect from these fair value gaps, right, is that when we are in a bearish trend, when we are in a downtrend, we expect the bearish fair value gap to push price lower. So at any point that price comes back to this fair value gap in a downtrend, we expect it to do what? To push price lower. We expect it to resist price from moving upwards and then push it lower. Okay. And in a bullish trend, okay, in an uptrend, we expect the same thing we expect a bullish fair value gap to do or support price and then move it higher. That is the expectation. So in a downtrend, we expect a bearish value gap to move price down when it gets to that fair value gap. And then in a bullish trend, you expect price to support to use that fair value gap, okay, the fair value gap to support the price higher. That is what we call fair value gaps. So fair value gaps are, you know, another form of support and resistance, right? So how or what do we expect when price gets into a fair value gap? Okay, so we have an ideal candle expectation in a fair value gap. Okay, candle reaction expectation in a fair value gap. So when price gets into a fair value gap, what are you looking for? Okay, so we have example one right here. So in the example one, what you are looking for is price gets into the fair value gap. Okay, when price is in a downtrend, comes lower, create a strange low. When it comes back into that fair value gap that you created, okay, when it comes back into that bearish fair value gap, you expect the candle that goes into the fair value gap to trade into the fair value gap and then close outside. When you understand candle signs, you know this is the wick, right? And so when there is a wick, so and then here is where the candle closes. Okay. Here's where the candle closes, and here's where it does what? It opens. So we expect this candle, right, to enter the fair value gap, right? And then close outside. Okay. We expect it to enter the fair value gap and close outside. So it leaves the wick into the fair value gap. When it happens like this, then you know that price wants to do what? Trade lower. So when it gets into that and it closes like this, and price can continue lower. Okay. And another example is when price gets into a fair value gap, what you expect the price to do or the candle to do is that the candle goes into the fair value gap, goes beyond or above 50% of that fair value gap. So when you measure the fair value gap using the Fibonacci tool, right there, you realize that this is the midpoint of the fair value gap, the 0.5 or the 50% of the fair value gap, right? So price gets into the fair value gap, pushes to the 50% of that fair value gap, goes above it, and then closes outside the fair value gap. So when price does this, it means price wants to do what? Continue lower. Price respects the fair value gap and wants to continue lower. Okay. And same also applies for a bullish trend too. So when we are in an uptrend, we expect the same to happen. We expect price to do what? Come into the fair value gap, 50%, and then close outside and then move upwards. The third ideal expectation is that we expect price to do what? Come back into the fair value gap, go completely fill the fair value gap, okay? Completely fill the fair value gap, and then closes outside the 50% of that fair value gap, right? So when price goes into the fair value gap, it completely fills it, okay? It fills it full to the brim of it, right? Full. And then it closes below the 50% of that fair value gap. So when price closes below the 50% of that fair value gap, you expect price to do what? To move higher. Sorry, to move lower or support it. So this is the same thing for a bullish fair value gap, okay? So in a bullish fair value gap, right? In a bullish fair value gap, this is the fair value gap right here. Okay. Um, sorry. Good. So in a bullish fair value gap, we expect price to do what? Come to 50% of that fair value gap, right? And then to close outside the fair value gap, as I explained here, close outside the 50% of it, and then move higher. That is a bullish example. So when you look at these charts, okay, when you look at these examples, it's just the vice versa of them. That is the bullish. Okay, so this is a bearish example. So the vice versa of these, or the opposite of these, is also the same for bullish. Nothing changes. The same idea. Okay, so that is what you expect when price gets into a fair value gap. Okay, so when you want to trade from a fair value gap, this is what you are expecting. Price, number one, price gets into the fair value gap, closes outside, continues lower. Price gets into the fair value gap, goes beyond 50% of the fair value gap, closes outside, continue lower. Price goes into the fair value gap, completely fills the fair value gap, closes below the 50% of that fair value gap, continues lower. Okay. Now, what do you not want to see in the fair value gap? Okay. What shows the fair value gap is being disrespected? That means what shows the fair value gap is not being used, it's not going to be used to actually continue lower. Okay, so let's say in a downtrend, right? In a downtrend, we have a SIBI right here. We have a bearish fair value gap right here. When price goes into that fair value gap and closes inside the fair value gap, like this, okay, when it doesn't move to the 50%, but then it goes into the fair value gap and closes inside the fair value gap, rather than closing outside, there's a question mark on it. You do not want to see this ideally. That's why I put ideal there. Ideally, this is not what you want to see. Now, when this happens, it could go either way. Price might actually go beyond it and then not use it as a support, okay, or a resistance to push price lower or higher if it's a bullish fair value gap. So when price goes into this is what you don't want to see. When price goes into the fair value gap, okay, the risk doesn't go to the 50% of it. So the risk is just right here. Okay, it doesn't go to the 50% of it. And then it closes inside the fair value gap. You don't want to see that. So same applies to this. When price goes into the fair value gap, right? Goes beyond the 50% of that fair value gap, right? And then it closes above the 50% of that fair value gap. You don't want to see this, right? This invalidates the fair value gap. It makes the fair value gap invalid. You can't use it again. Okay, so this is what invalidates a fair value gap. And then the last example is when price completely fills the fair value gap and then closes either inside or above the 50% of that fair value gap. So it either closed outside, sorry. Okay. So when price closes outside the fair value gap like this, it means the fair value gap has been invalidated. Okay. It has been invalidated. So example number one is price goes into a fair value gap and closes inside it. Okay. That's number one. You don't want to see this happening. Number two, price goes above the 50% of that fair value gap and closes above the 50% of that fair value gap. Okay, so when it's a bullish fair value gap, it means it closes below the 50% of that fair value gap. Okay, so just take this and then turn it over. So make it the opposite. That's the bullish, right? And also the last example of what invalidates a fair value gap is when price goes into that fair value gap and then closes outside that fair value gap. Okay, it closes above the fair value gap. When it closes above the fair value gap like this, it invalidates the fair value gap. Price does not want to respect this fair value gap, and now this fair value gap is no more valid to push price lower anymore. So these are the three types of examples, right, that you don't want to see happening. Uh, all right. So we'll look onto the chat and then we find some few examples from the chat to understand what I mean and how you are going to use the fair value gap and what you actually want to see. All right. So let's go into the charts. So this is the 4-hour chart on gold. And so in this example, you can see right here, we have a BC. Okay, we have a bullish fair value gap right here. A bullish fair value gap right here. So you see what price did? This candle right here came into that fair value gap right there. Okay. This candle right there came into that fair value gap right there, closes outside, and then what does it do? It pushes price higher. Okay. Closes outside. See, it comes into it, closes outside, pushes price higher. And then we have different examples too. Let's go into the daily time frame. All right. So this fair value gap, for example, right there. Can see how it delivered. Price created a fair value gap, a bullish fair value gap. This candle right here came into that fair value gap, closes outside, and then now the next candle was a bullish candle that pushes price what? Higher. Now, as you can see, all these candles that came later, right? They are still respecting that fair value gap. As you can see, this candle later came back into it, closed outside. This completely filled the fair value gap, yet closed outside it. This next candle did the same thing, filled the fair value gap, and closed outside it. This is what you want to see. So when you see things like this, it means price doesn't want to go lower. Price wants to do what? Push higher. So now from here, your expectation is that price goes to this high. Okay. Let's take a example at um a few bearish fair value gaps, and then you'll be done for this video. It's just an easy one. Don't have to stress yourself. The ideal scenario is to identify the fair value gap. The moment you identify the fair value gap, that's it. If you're able to identify the fair value gap in the right trend, that's what you're looking for. So you're in a downtrend. This is also a bearish fair value gap, right? And you can see what happened right here. When price created that bearish fair value gap and came inside, okay, when it entered that fair value gap, what it did was it filled it completely, went beyond or above 50% of it, and then even closed outside. This is an ideal scenario. When this happens, you know that price wants to go lower. And then the next thing that happens is that price goes lower. So we are just identifying bullish fair value gaps, sorry, bearish fair value gaps, and then we see how price reacted to them. Mm, all right, so kind of being in an uptrend for a while. So okay, the market has been very, very bullish. So you are very unlikely to see um bearish fair value gaps actually. That's why I'm quite struggling to get some here. Another example, another bearish fair value gap right here. Yeah, in the downtrend, bearish fair value gap has been created. And look at what this fair value gap did. So when price came back into that fair value gap, went inside that fair value gap. It didn't go beyond the 50% of that fair value gap right here, the midpoint right there. That's been marked. And when price went into it, it closed outside. And the next thing that happened was that price pushed lower, then went lower. So it's all about finding the fair value gap in the trend at the right time of the trend, and then how price reacts to it. Okay. I have another example here, last example, and then we close. This fair value gap right here. Okay. See how price came back into that fair value gap. Let's zoom in. Okay, this is a bullish fair value gap. You see how price came back to that fair value gap, closed outside, came back, closed outside, came back again, closed outside, completely failed it, closed outside, meaning it is respecting that fair value gap. And then what did it do next? Pushed price higher. So this is a lesson on fair value gaps. And this is just a video, okay, for you to understand fair value gaps, okay, and how to identify them on the charts. Okay. So I hope you enjoyed this video. You were able to identify fair value gaps in the trends, and then you watch the reactions to it, and then you act upon it. Thank you.